So what is the biggest risk now? Well, a lot of central bankers say it's shadow banks. So we're essentially right back to, well, hang on, now that you put more.
Sorry, I've got to ask, what's a shadow bank?
Yeah, so I was just about to define it.
I was like, before you get to the definition, I just like to hit the button whenever I can. So I was like, let me not miss this moment.
So shadow banks, we started to hear about them after 2008 because it's like, wait, hang on. Private equity. So these are firms that are lending money using private money. So in other words, pension funds give them money they invested. They branched out into lending. So it's called private credit. So now you've got lending from banks without a banking license, in a sense, right? You borrow money, it's your lender, because you're a bank, but you don't have a banking license. So if you don't have a banking license, who regulates you?
Yeah.
Generally, you're regulated generally, but not specifically. Yeah. And so this is a great example of how, this is why I sort of did a little history. Until you had this growth of the financial sector, you just didn't have this many crashes. Now, a lot of, the debates here are always very interesting, especially now where the UK is talking about increasing competitiveness, because if you have lots of startups that need cash, if you want to be in the technology sector, which requires a lot of, if you want to build a battery for electric vehicles, we're talking billions. We're not talking millions, we're talking billions. So where does this money come from? And so one argument is if you do not have a transparent way of looking at all the different bits of lending in the financial sector, you could actually dampen growth by, for instance, this is the UK debate. Why is it that we don't seem to be able to produce any major tech companies the way the US does? We're just as prone to crises, by the way. So I think there is, but I think to me, the main thing is we always regulate for the last crisis. And so when you look at the next one, the shadow banks, half of the lending in the world right now comes from shadow banks.
Wow.
So we'll use China as an example because the crash is happening now. So a lot of people look at China's property crash, and it is very worrying, obviously. Biggest property companies in China are among the biggest companies in the world, which are leveraged. So as property prices crash, Chinese people don't borrow a lot to buy their homes. Actually, their mortgages are pretty small. They save money. But the property developers borrow a lot of money. But they don't borrow it from the state-owned banks, because the state-owned banks are state-owned and pretty cautious, actually. They have lots of other problems. But, so where do they borrow it from? They borrow from the shadow banking sector. So they just borrow it from other sources of money. Could be, any source of private credit outside of the banking sector. It's not all loan sharks. It always sounds of a shady shadow banks.
Sounds like something out of Harry Potter or something like out of a mob film.
Yeah,
shadow banks.
Yeah.
It's a good name.
So because we have such little information, you don't actually really know, which is actually the problem. And so therefore, you have these big indebted property companies, Evergrande, greatly in the news, pretty much defaulted on, people lend money to it. It's borrowing from somebody within China, and it's the shadow bank. So if the property sector continues to struggle, then the shadow banks could fail in the same way that a regular bank could fail. You lend too much money, you're not getting paid back, you could fail. Who else have they lent to? Well, one example is one province in China on the East Coast, very entrepreneurial. Half the companies there borrow from shadow banks. So if the shadow banks go under, those companies can't operate because they've now lost their access to credit. And then these are the people who would be losing money and therefore could crash the economy. So I think there is quite a big risk. That is actually what's happening in China. It's just that, we never hear about it. So, but it's an example.
How using the lessons of the past, and what kind of policy would we need to enact if that was to happen? We can't prevent it, as you've said. We'd step in.
Yeah, so I think speed and decisiveness is very important. So the first thing is to work out, taking China as the example again, they've been trying to deal with the shadow banks now for years. You need to know, you just need data, and a lot of lending is digital. As we all know, if it's digital, it's actually pretty traceable. So they have dealt with this quite slowly. Because, it takes a while to publish a book, right? You finish the manuscript, it gets sent in, and then it gets turned around. And so I was trying to write the book pretty quickly because there were so many crashes. And I was like, I'm never going to finish this book. Mm-hmm. But I also wanted to do it before the Chinese system really imploded because I was like, oh, no, this chapter's never going to get finished.
Then you could be like, called it.
But I think I was quite concerned that, obviously for China, I wanted them to sort it quickly. But for myself, I was like, oh no, when that goes to print, how am I going to update this? But my point is they've now taken so long that they're still slowly gathering the information because it's really hard to get information from, shadow banks. And so if you don't have information, how can you really credibly deal with it quickly? In other words, if you knew who the lenders were, those are the ones that you would go check the books, make sure they had, stop overextending themselves. Can they manage the loans that they currently have? Are there ways that, but that's the quickly sorting the bank's point, which is just this is the lesson from history they should have learned. I'm just not sure that it's, one, feasible, but two, I do worry that they haven't done so already, we know of.
You also talk about lack of credibility in China itself, though, and the financial reporting that comes out of there. There's another layer, isn't there, that China are not, like their GDP figures are often questioned and stuff. So how does that go into the mix of this?
Yeah, so I think if you look at how China's weathered a few crashes, this point about credibility, I think, is a real challenge for them. So, China had a stock market crash in 2015. They did have a local shadow banking crash before as well, but they haven't displayed the kinds of policies that give confidence. And so I think that is something that we should worry about. But the thing I would also say is Mark Twain had this great saying, which is history doesn't repeat itself, but it does rhyme. Yeah. So what I just said is part of the story because China is different, but every crash is different. But by the way, when people in financial markets say this time is different, what they're implying is this time, don't worry, it's not a bubble, it'll be fine. When I say this time is different, I actually just mean you should never wholesale apply anything from one country or one time to another. And China kind of fits that. So why hasn't China's crash been worse? Well, they own all the banks. They have capital controls, which means money doesn't really leave the country. People have confidence in the banking sector because I think they don't have much of a choice. Everything is state-owned. So there's so many reasons why they don't fit the model. So, for instance, banks, they should do what's called mark-to-market. Right, so your balance sheet should reflect the value of your mortgages, of your business loans. They don't really mark to market because China's market is a bit imperfect. So you don't actually know whether their balance sheets are sound or not. So, and then I made a couple of references to the fact that it's hard to know what's really happening in China. So they might have massive crashes in different bits, or they could be doing a brilliant job sorting it. We're only getting glimpses, of it. However, if China were to have a great crash because of the shadow banks and this ongoing property problem, it would have global consequences.
They couldn't hide it.
No, it would have.
You say that there's a lot of fragile economies that are reliant on credit from China.
Yeah, that's actually one of my biggest worries because we do have this unusual, very unusual, where China actually lends more overseas than the World Bank, whose job it is to lend to countries to alleviate poverty. International Monetary Fund, its sister institution. China is the biggest lender in the world. But mostly to developing countries. So some developing countries, the biggest portion of their debt is owed to China. And therefore, if China were to have a crash and it started to pull back its loans or just cease its loans, then you could see countries struggling, developing countries struggling. And given that China doesn't cooperate with, other countries in terms of how it does its lending, I worry that all the tensions you see with China and other countries means there wouldn't be a quick enough response to help those countries if China were to pull back their lending. And that could cause a emerging market crisis. We've had a lot of these with regularity, and that would cause misery for millions of people, because we talked about banking crashes being miserable. Being rescued as a country is absolutely miserable. And so, so that's one of my worries about China's crash.
Could that be a global meltdown, or do you think it wouldn't affect Western civilization as much because, America and China aren't exactly best friends? Do you think it would be more like Africa and other countries that will be affected, or do you think it would have knock-on effects for like us in America as well?
Well, it's a great question because it also reminds me of another lesson from history. So the biggest hedge fund in the United States was brought down by an emerging markets crisis. So this is the 1990s Asian financial crisis, which then spread to Russia, Turkey, Latin America, and it brought down LTCM, Long-Term Capital Management, which was at the time the biggest hedge fund in the US, which made it the biggest hedge fund in the world. So I write about this because LTCM had on its books not one, but two Nobel laureates in economics, economists that won the top prize in the subject. They had a vice chairman of the US Federal Reserve, top central banker, who quit the Fed to actually join LTCM. So despite their incredible pedigree, they were rescued by the US government because of their bets on emerging markets that went wrong. And the US government rescued them because they were concerned about the size and the reach of this hedge fund. And so they're worried about, domino effect that we've described. And so do I think today an emerging markets crisis could affect the West? Yes, for the same reason. And this is actually, a lesson that I felt is always worth emphasizing, because I think it's, you think linkages in the financial markets, but it's worth taking another look.
That was a clip from a recent conversation we had with Linda Yu about financial crashes. If you want to see the full episode, then just click here.